I would say that one of the main strengths is that we have in France is that the market is relatively easy to read. I.e., when we build cash flow models to underwrite loans, we need to figure out how long it will take to renew a lease, because in France, as you know, a lot of lease agreements are short-term. And we know from the research paper, from our experience, if it takes 12 months or 2 years plus X months downtime to relet a property. So that makes the market quite easy relatively to others to underwrite, since you know in every zone exactly how it will run. I'm not sure it's that easy to do in other countries. We have very strong research, we have a very deep market, and very transparent market as well. I think it helps a lot of people. In other countries, other large cities, is not always the case.
I think the French market, the logistic French market, has been pretty much resilient over the last years, despite kind of a challenging economic environment in France. And that's something that we have been observing over the last 4 or 5 years. And I do expect this market to continue being resilient, probably to be a bit stronger, and a bit stronger because we'll get into the details in a minute, I'm sure, but because the supply is very tight and the demand, while not exceptional, is still okay. And on the investment side, clearly, I mean, there is a lot of appetite for the logistic market in France. I think the first half of the year has been, has recorded volume 27% in excess of last year for the same period. So this is clearly a testament that the French market is actually attractive. Compared to the other market, it's actually still lagging behind the UK market by a big number, and the German market, but it's clearly the third largest investment market in logistic real estate in Europe.